Hi, I'm Max Keiser. This is the Keiser Report. You've heard of urban blight, but have you heard of market blithe? Stacey Herbert, tell me more.
Max, she speaks. Blythe masters on the blogosphere, silver manipulation, gold axed clients, and doing the wrong thing. So this is Blythe Masters, the inventor of the credit default swap and the head of the commodities trading at JP Morgan.
And a lot of concern has been placed, though, about JP Morgan's, particularly its positions in the metals space. And looking at your positions in silver, we talked earlier about the volatility in the silver market. Can you talk about JP Morgan's positions and price volatility, and how are they related?
As I mentioned earlier, our business is a client-driven business where we execute on behalf of clients to achieve their financial and risk management objectives. The challenge is that commentators don't see all of that activity simultaneously. So just to give you a simple example, we store significant amounts of commodities, for example, silver, on behalf of customers. We operate vaults in New York City, in Singapore, and in London. And often when customers have that metal stored in our facilities, they hedge it on a forward basis through JP Morgan, who in turn hedges itself in the commodity markets. If you see only the hedges and our activity in the futures market, but you aren't aware of the underlying client position that we're hedging, then it would suggest inaccurately that we're running a large directional position. In fact, that's not the case at all. We have offsetting positions. We have no stake in whether prices rise or decline. Rather, we're running a flat or a relatively matched
So
book.
it's not...
She's lying, of course, and we can go into all the different ways that she's lying. But more importantly, Stacey, Blythe has made a fatal mistake by coming out into the public and exposing the fact that the silver market has a witch. Her name is Blythe Masters, and therefore, we are going to New York. We're going to be in New York April 12th at 8 p.m. at 178 Mott Street to rally the Silver Liberation Army in New York City. To New York we go!
Well, let's speak specifically about the lie she presented here. She said that we have no stake in whether prices rise or decline. Rather, we're running a flat or relatively flat matched book. So what she's saying by saying we have a matched book is that they have no net prop exposure, i.e. they haven't broken the Volcker rules. So you are the inventor of the virtual specialist technology, which is a market maker technology. Is she just claiming to be a market maker and that it's all just providing liquidity and no big deal?
Well, she's lying. Well, for example, it takes $20 million of orders for a downtick. It takes $100 million of orders for an uptick. That's a completely lopsided market. It's been that way for years. You know, the market should have some kind of relative dynamism where, yes, there is an imbalance in number of trades it takes to affect an uptick or a downtick, and it changes periodically throughout the trading day and over a trading session and over a month. But to have every single day this imbalance where it takes 20 million for a downtick and 100 million for an uptick, that shows complete manipulation. They have both sides of the book. They are completely on the sell side with her naked credit default swaps.
And then she's asked specifically that, well, people in the blogosphere are saying that you manipulate the silver market. And here's her answer. Let's turn to this video again, Max.
Because what is commonly out there is that JP Morgan is manipulating the metals market, and from what you're outlining, that is not possible because of the different sides of the business that you're a part of.
That's right. It's not part of our business model. It would be wrong, and we don't do it.
Well, manipulation is the very center of JP Morgan's business model, whether it's through MF Global, for example, where they got caught red-handed, the pending lawsuits in London where JP Morgan is named for manipulating the silver markets, the various fines that JP Morgan has had to pay over the past 12, 24, 36 months for market manipulation. You know, that's their model. Their model is market manipulation. Otherwise, they would not be able to take these outsized bonuses and extract it from the market as they do, unless that they are perpetuating some kind of fraud. As even Warren Buffett has said, if you're making more than 2 times the rate of inflation, you're stealing. He says it, and Jamie Dimon and Blythe Masters personify it. They personify theft. They're larcenistic psychopaths. And we're going to New York, and we're going to get this Silver Liberation Army, rally these troops, and we're going to march on these crooks.
Okay, so Max, here Blythe claims that never would JP Morgan take a position essentially against their clients. So let's turn to a headline where the very same day this came out. JP Morgan trader accused of breaking CDS index market with a massive prop position. A JP Morgan Chase trader of derivatives linked to the financial health of corporations has amassed positions so large that he's driving price moves in the $10 trillion market, traders outside the firm said. He's dubbed the London Whale, and his name is Bruno Ixel in the London desk of JP Morgan.
As you point out, the very exact same day that Blythe Masters is saying that, oh, JP Morgan doesn't take positions ahead of the clients and the prop desk is not out of control, here's a huge prop trader in London, out of control, trading ahead of clients and committing massive fraud. And right next to Blythe Masters. And of course, London and Blythe in London are where most of the frauds take place, whether it's AIG, Lehman Brothers, MF Global, the hypothecation, rehypothecation, silver market manipulation, all goes through Blythe, all goes through London, and we see it time and time and time again.
Well, in particular, the silver market manipulation is alleged to happen specifically through London. This is what Andrew Maguire argues. This is how he was able to front-run JP Morgan's own manipulation. So if Blythe Masters says, no way do we manipulate markets, how were a team of traders able to front-run them if there was no plan behind what they were doing?
Right, well, silver and gold are for Blythe and these prop traders a source of funds. They know that there's a huge demand for these precious metals as the central banks flood the market with fiat cash. So there's a natural upward bias. And every once in a while, they come in there and they clip the wings of silver and gold with these massive naked short sale positions, and they book some easy money. It's easy money. It's a source of funds. But there is nevertheless the possibility and the potential for individuals to buy silver physical, take it off the market, and bust their ability to rape these markets daily, as they're doing now. And the Silver Liberation Army now has had enough of enough. Where Occupy Wall Street is basically had its day. The Silver Liberation Army is the next chapter. You know, we're taking it now to the next level. Forget Occupy. Occupy has had its day. The SLA, the SLA is now this year's, today, right now. And the great thing about the SLA is that the silver, you know, as Ron Paul showed Ben Bernanke, you hold it up to the vampire. You hold this up to Blythe Masters. The silver bullet. We had great success last year taking it to 50. Now we're going to take it to 500.
Now let's look at this other situation, this $10 trillion market, this credit default swap market. Investors complain that Bruno Ixel's trades may be distorting prices, affecting bondholders who use the instruments to hedge hundreds of billions of dollars of fixed income holdings. Analysts and economists also use the indexes to help gauge perceptions of risk in credit markets. In some cases, the trader is believed to have broken the index, Wall Street lingo for the market dysfunction that occurs when a price gap opens up between the index and its underlying constituents.
Yes, we have explained that on this show many times. We call it price propaganda. When they affect the perception of price, when they change the index as it relates to the market, they create a response. Like Pavlovian dogs, you know, you create a reaction. When you have a certain price in the marketplace, this creates either buyers or sellers. And they know that. So they exactly what's being talked about here. You use your outsized influence in these markets to create a price that affects propaganda, that creates propaganda.
And Zero Hedge in the article about Blythe was questioning whether or not they were working on behalf of the Fed. Here, the same thing. You see JP Morgan London manipulating the CDS market, altering people's perceptions of risk in the credit markets. We saw the same thing with the LIBOR rate, altering people's perceptions of risk in the credit markets. Now, clearly, Bank of England, the U.S. Federal Reserve Bank, the Central Bank of Europe, they don't want people to perceive there to be any risk.
That's right. They don't want people to perceive there's any inflation. So they keep interest rates near 0%. That's price propaganda. Meanwhile, energy and food are going to all-time highs. Now, people say, well, what's the difference if they're manipulating the price on the upside or the downside? They're still making money. The difference is that at the end of the day, they're flooding these markets with fiat currency and causing massive inflation and loss of purchasing power and negative real interest rates, and leading to people like in Athens who are blowing their brains out. Thank you, Blythe Master, you murderer. You put the bullet in the guy's head, Blythe. Okay? Now, when you take silver to 500, what happens? We get rich. It's our money. We get to reestablish our money.
It's way more important than that, because as all of these traders in the CDS market in London are saying, all those hedge funds, hundreds of billions of dollars under their control, and they're being forced out of the market by a giant whale who has the entirety of the Federal Reserve balance sheet, the entirety of the Bank of England balance sheet on their side. They could do what they want. They could smash you, but at the end of the day, Blythe Masters is not going to go down into a mine and go mining for silver.
No, but I mean, let's be clear about something. They have the vast resources of the market, as you just expressed. They have near 0% interest rates, and they have the backstop of the central bank. And they use this to commit fraud, and anytime they make a mistake, they put a gun to the head of government and say, either give us another bailout or we're going to kill the economy. I'm saying put an end to that cycle.
Yeah.
If you take silver to $500 and you take give them the chance to own real financial independence as opposed to being dependent on the Fed and on the government and being a slave, being independent, the Declaration of Independence. Do you remember those words? Okay, it's all about what it says in the Constitution of the United States of America. Gold and silver are the only recognized money. And I say silver's got to go to 500, and we can do it.
So let's look at this collusion between these top banks and the Fed, how they work together to distort our perceptions of what we see around us. Why the Fed will intervene if stocks fall too far. This is in the Dow Jones Market Watch, okay? The same sort of publication that would mock the Occupy Wall Street socialists. Here they are saying investors looking for more Federal Reserve intervention can pretty much ignore the economic data, i.e. the people don't matter, and train their sights on one area, the stock market, and how much of a drop it will take before the central bank comes to the rescue. According to Quincy Crosby, chief market strategist at Prudential Annuities, Mr. Bernanke and former Fed Chair Alan Greenspan made it clear that the stock market is the transmission mechanism for monetary policy. So here you have it, the proof of why JP Morgan would be manipulating silver prices. People laugh and say it's a conspiracy, but here you're seeing openly, oh, well, it's accepted that the price is transmitting monetary policy.
For a very select group of people who are benefiting from this private inflation that completely does a bypass around wages. That's why when I'm in New York on April 12th at 8 p.m. at 178 Mott Street in Manhattan, we're going to rally the troops to take silver to 500. This is the next chapter, and all of these people like Blythe and Ben and Jamie are going down. All right, Stacey Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming away, so stay right there.